Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host, and it is Friday, August 21st, 2015, about 10 o'clock at night, and we're looking at the chart of the S&P 500, and as you can see here by this big red candle, it was a pretty fearful week for participants in the market, and clearly, the ending diagonal has begun to express itself here, and our target area is down here to at least 1800. Notice I said at least. The tendency is for this to go back to the start of the pattern at least. Excuse me, it could go further. So I'm going to spend a little time on this. We're going to go to a two-year chart, but I want to spend a little time on the S&P 500 this week because, some of you might be wondering, okay, what do we do now? And this is the challenge with the market. The market tends to take the stairs up and the elevator down. So this clearly looks like an elevator move. In fact, it's about 6%. So, in fact, I'm going to show you something on the Dow in a minute. The Dow cut below even the January 2014 highs. So, I mean, it's taken 2-year bite out of that market. But I want to talk a little bit about what we might look for here and how we go about making a decision in this particular market. So, there's really, in my mind, there's two possibilities. One, I think the first thing is, no matter what, I think you'll see the market go slightly lower. You can see I've got this 1962 area on the chart. And maybe even goes even lower than that, but you get like a tail like this, okay? Then once this happens, okay, we're going to get something pretty sharp, maybe over 2 or 3 days, that looks like this up into this area. Like so. Now, this is the real, then, let me just say it this way, then this is actually going to make its way down and actually make a lower low. It's actually going to undercut this low. This is just the way the market moves, okay? Now, normally, in a pullback, so when you have a pullback, after you get a move, this final move down like this, then you get a return to just slightly higher than this high right here. And then, of course, the market pulls back, and then it goes up, so on and so forth, okay? But, and this is the real tricky part right here. If it goes up and does not take out this high and begins to roll over, you need to, your caution antenna needs to be really turned up, because this is the next move. This could be, this move could make this move look like a picnic. So just be very careful here. If you're going to wait for all this to play out and you're going to just try to get out, somewhere up here as you move back up, pay real close attention to not only this move up and the move down. There's going to be it's going to be traumatic for people, okay? They're not going to like it. It might not even go this high before it rolls over and comes down and makes a lower low. Because you can see here, for one thing, this move, this first move down, and I haven't talked a lot about this, but see this depth here, the depth here, and this depth here, they tend to be proportional. And you can see I've drawn it much larger than this one up here. So you could actually see it only go to about here and then come down. So just keep that in mind. But the kicker really is, does this come up above here, or does it fall short, kind of wiggle, and then fall down? Anyway, those are the two scenarios that you need to really focus on. Of course, you could just say, man, this sounds really bad. I'm just going to get the heck out of the way and take my 6% loss and move on down the road. I mean, that's certainly legitimate. I mean, we're higher now than we were. We're 400 or 500 points higher than they were in 2008. So it's not like you're you shouldn't be losing money at this point. Let's look at the VIX. The VIX really, I mean, a lot of fear came into the market this week, and let me go back to a weekly. And you can see here by looking at this big white candle here, tons of fear just poured into the market. I mean, people were clearly not positioned for this move and had to scramble. And of course, that's why the VIX basically doubled. It went from 13 to more than doubled to 28. And of course, the VIX, volatility can come out of the market pretty quickly too. If the market rallies real fast, you get some movement in the market. Let me go. I forgot to go to the Dow Jones Industrial Average because I wanted to show you. This is 2014 here. This is December 29th, 2014, or January. December 29th, 2013, or January 2014. And you can see here, you can see my horizontal line there. You can see that today's Dow move actually undercut the January 2014 high. Now that's pretty amazing. I mean, it's just amazing that just a few bars here can wipe out that much equity in the market. And this, of course, is what we're trying to keep people out of. So hopefully you can appreciate not only the fact that we're trying to do that, but also the difficulty in doing it in a way that is somewhat disciplined and doesn't lead you to do things that end up costing you money. So that's a fine line to walk. Let's see, Germany. Let me go back to 5-year here. I don't know. It looked like Germany was going to bounce. Now I'm not so sure. Certainly Germany is going to come all the way down here. Could bounce. Of course, if it bounces and makes you can see here it made a lower high. You had a high and then a low and then a lower high here. So if it comes down here and makes a lower low and then rallies back up and fails to make a higher high, and then I think Germany's done. Now, if it comes down here, and then bounces, then we could go up into this area here. Okay, we're talking about going up into that area. But if Germany comes down like so to a lower, so here's the previous low, now we got a lower low, and then it rallies, but then rallies to say right there, maybe the underside of the trend line, and starts to roll over, then Germany's done. Okay, Germany's seen its highs. But we can't just say that just yet. What we have to do is we have to kind of look at it and go, see, there's no ending diagonal on Germany. There's nothing there to really show us something to be cautious about. So we do have to look at trend and pay attention to that. Japan looks done to me already. This is they had a pretty big 3.4% on an index in a single week, or a single day rather, is pretty significant. So from high to low, Japan, from this previous high to here, Japan is down 10%. So that's its 10% correction. Now, given the way it looks, I don't think the chances are very good that it's going to bounce and go higher, but who knows? Maybe I could be wrong. The UK the UK and Germany look very similar, except that the UK broke its channel a lot earlier and therefore looks weaker. And definitely looks like it's going to come down here. And I bet probably does not get anywhere close to this high right here. You might see something like, and we'll look at the FTSE here in a little while. Finally figured out how to look at that on my program. So you can see the UK come down here and then meander its way up and probably stop somewhere right in here. There's kind of a consolidation triangle here, and a lot of times that's where the market will stop going up, is near the apex of one of these consolidations. So that'd be something to look for on the UK. Why don't we switch over to the TOS charts, Thinkorswim charts, and look at gold. I tell you what, let's look at the dollar first. The Dixie, as they call it. I don't know what the heck I just did. Oh. Didn't put the slash in there. Let me put the slash in there. All right, that's better. And you can see here, now what we talked about last week is we had this correction into this DP, but then, it kind of came up, looked like it was going to make some higher highs, and I went ahead and put a DP in this area, and it went up there and then rolled over. So, the dollar is coming, and when we get to gold, I'll explain why this makes a lot of sense. Let me zoom in a little bit better there. Wow, man, there's like fireworks going on my screen here. Okay, how about that? So, it looked like gold was through going, the dollar was through going down here and it looked like it was on its way up. Of course, it hit DP support or DP resistance and pulled back. Now, it could continue higher here, okay, and move on. But I think more likely what's going to happen is that it's going to probably at least come to here and maybe break through this this support area. And the reason I say that, I shall explain. Worry not. If you look at gold, has had a pretty good pullback, right, over 2 years, 2.5 years. And if we zoom in on gold, we had a pretty good, sell off into this support area, and then a really strong move out. You're hearing people like Stanley Druckenmiller's taking a huge position in GLD, and George Soros has bought a bunch of gold, people like that. And so now I don't know if they made this trend or if they're the ones if that news created this trend, but it's probably a little bit of both. But I think gold wants to move at least up. Let me take these lines off real quick. I'll move drawings just to make it a little easier to see here. I think gold is probably, and by the way, what I think doesn't really matter. I'm just trying to give you guys some insight into what I see. Gold could certainly pull back and make a slightly lower low than this low here, down into this area. But it looks to me like gold wants to go a little higher from here. Now, maybe not straight higher. Maybe it pulls back a little bit and then goes higher. And then you're going to see some consolidation down and then a pretty good run up. I think ultimately, just looking at gold the way it looks, you could see gold. A lot of times, if you measure this move, and we can measure this move using Fibonacci, it'll retrace about 50% of the move. So let me do Fibonacci retracement. So if I go from high to low here, from high all the way to the low, you can see the 50% retracement is right here at $1,500. And I think that's probably a good spot for gold to go to. Now, it could take a while. I mean, it could take a pretty good while. I mean, maybe what you see gold do from here. Let me get back on my pointer. There we go. What you could see gold do from here is something like, again with the fireworks. I'm not sure what's going on tonight. Let me. There we go. You can see gold kind of meander its way up into this area and then pull back pretty good, kind of scare out some of the bulls and then make its way up into this area up here. I think this is probably the counter trend move in gold, and it could take a year. I mean, given how long this was, it could take a solid year for this to happen. And then you're going to see gold. This is not the low price in gold. Gold's probably, because of the way the paper market is in gold versus the physical market, you're probably going to see gold at least go down to around 700, 750, something like that, and maybe even lower, maybe 600. So this is just a counter trend move in a larger bear market that's going to go way down here somewhere. Okay, so now here's the kicker. It's probably not a bad place to buy physical gold if you're going to buy physical gold. And the reason I say that is when you buy gold, if you buy a gold bullion, gold coin, let's say you buy a $20, the old $20 gold piece, which is the eagle. I guess it's the eagle or Liberty Eagle or whatever. You're going to pay for that ounce of gold, let's say at $1,100, or in this case $1,159.90. But you also have to pay a commission. And one of the things that's possible, potentially, this is some of the things I see written. Yeah, you may wait to be able to buy gold at $600, but the commission might be, $50 an ounce. And it might be really hard to find physical gold. Nobody knows. Nobody knows the future. So it's impossible to say, oh yeah, there'll be plenty of gold available to physically buy when it's at $600. So, you can take a chance and wait till gold's $600 and try to buy some. Or you can buy a little bit now and then buy a little bit more on a pullback here and then wait and see if you can buy some kind of as it's going down, or try to buy it really low. But the whole thing about gold is what your physical gold is a hedge against government. So, and who knows what government's going to do. I mean, that's been very difficult to predict. I think if we watch the Fed and how they handle a crash in the market, let's say the market begins to crash. I think if the Fed intervenes pretty significantly, now keep in mind that they don't have very many tools to intervene. So if we start hearing about QE 4 and 5 and 6 and 10 and all this kind of stuff, well then obviously gold is going to appreciate in value, because all that QE stuff just dilutes everybody's money. So anybody that's got any money in savings, anybody that has any that owns their house, that owns their car, that owns anything of value, now then it takes more dollars to buy that thing of value, simply because there's more dollars in the economy. So that in gold is limited by what you can physically produce. So that's how that works. All right, let's look at let's go to NinjaTrader and look at crude oil. Find the right chart. Let's look at the weekly chart. Actually, let's look at the monthly chart. We'll look at the monthly, because this move in crude oil is actually very, very large. You can kind of see it here. I've got it. This software. Wow, what is going on with this? This software maps it out for me, so you can kind of see you got this move down like so. Now, if crude oil is about through going down, then we can do a little measurement here and go from here to here and look for crude oil to bounce into this 68 to $80 range. So, but then it won't be through going down. So that's just a bounce. So let's say it, does something like this, bounces here, and then it'll be well on its way to making lower lows. I don't know how low crude oil can go. It could go, I tell you what, let's go back to this other chart and I'll put CL in. I think there's a much, much larger bull market going on in crude oil, and you can see way back here in 1999, the low in crude oil was $10.65. Now, this clearly looks like a bull market to me. Let's just draw some lines on here so you can see. We got a pretty good wave up here. If I can get it to click on something. There we go. And then you had a pullback, right? And then you had a big wave up to here. And then you had a smaller pullback and then a final wave up. So now what we're seeing is the correction. This is the first move. This is the correction after the first move. So that looks like this. A lot of times this is symmetric. So maybe something like that. So you can see crude oil go down here below $20. Certainly it will go below the 2008 low right here. I've got a DP right here, so it could stop at 30. Or it could go lower. Now, it's not, in my opinion, it's not going to go lower than this $10.65. The reason I drew this line so deep is you've got this area right here that goes back to that pullback, that pullback from 2001, late in 2001. You could see oil bounce right there, and then it's Katie bar the door. One of these days, we're going to be paying $400 or $500 a barrel for oil. I know that seems crazy at this point, but that's what the chart is suggesting. All right, let's go back to NinjaTrader and pull up. Let's look at the DAX. We talked about looking at the DAX earlier. So, one of the reasons I think the DAX could go higher is the Euro's already pulled way back, and the Euro's probably going to be stronger in the future than it is weaker. So, not only that, but we've got this trade here on the, well, that's not a, I guess that's not a recent trade. Made a pretty strong move up in here. I don't know. I mean, we're right here at support. I mean, you can see we're here at the typical wave C. I mean, if it pulls back even a little bit more, I would say the DAX is done. It needs to bounce right here, and probably what we need to see is something, I don't know, maybe some of you have heard this before, something called an inside day, where you get a gap up. I don't think that's likely. I mean, if we do get an inside day, maybe it looks more like, way down here, because these are monthly bars. So maybe you get something like this where it gaps up, runs up really good, and then closes. If you get an inside day, and then the next month is a higher bar also, then this is a good indication that the DAX is probably going to continue to move up, probably do something like this, and pull back, and then move higher. So, then pull back, and then move higher. So, we'll just have to wait and see. If the DAX pulls back here into this, that's probably 9,700. I would say then the DAX is done. So, hopefully that helps for those of you that are interested in the DAX. The FTSE, this pullback here looks too deep to me, and I would say the FTSE is done. It's probably, more analogous to what's going on in the Dow and the S&P. So that doesn't mean the FTSE won't bounce. In fact, I've got a little red box here that I would look for the FTSE to bounce into, and maybe actually come shy of that. You might only get a bounce into kind of this area right in here, 6,700 area. So if you're trading the FTSE 100, and I know there's at least one of you that does or looks at it, tell me what you think about this 6,700 area. That's where I'm seeing you could potentially bounce to. Now, it looks to me like it wants to come all the way down here first before it bounces up that high. I don't know. I could be wrong. Could come down here into this area and then bounce a little bit. This is a pretty big bar, so anything's possible at this point. You had a pretty big bar down here, and it reversed and made its way back up. So just because you have a big bar here doesn't mean it can't reverse. It just means, if part of my bias now is the U.S. market has kind of showed its hand, and a lot of these other markets they kind of follow the U.S. market in one way or another. So, let's see. Is there anything else we want to look? We can look at the euro. This is the future for the euro. Let me get on a weekly chart. So there's futures markets, and then there's forex markets, and this is the futures market for the euro. And you can see here, the euro may be through going down. I doubt it. I think we've got another move down, but longer term, the euro's direction is going to be up. You can see here. Let's say that this continues to. You can kind of see this counter trend move right here, this kind of zigzag right here. And then you got this move down here. And, we're probably in the next 3 to 4 to 5, 6 weeks or so, probably going to see a move in the euro to here. But then what'll happen then is you get a strong rebound move into this area, which will probably be associated with some dollar sell-off. So, and that dollar sell-off, is probably going to drive gold higher. This might be in other words, gold, the dollar going down. Let's say the dollar goes up. Well, that drives the euro down. And when the dollar goes down, that drives the euro up. So, longer term, because the dollar is high, I think longer term, the euro will be going up. The question is when. And I think we've got a new low in our future in the euro, below this low. And then we'll start to see the euro rally. And the first move will be up like this. And then you'll pull back. And then the next move will be up even bigger. So, but this could take a year or two to play out. So, don't get too anxious about trading the euro, next week or whatever. Man, I think that is it for the week. Let's just go back to the S&P 500. Oh, that's the ETF. Let's look at the index. And again, just as a refresher, real quick. Look for the euro. I'm back on the euro. Look for the S&P 500 and the Dow to pull down a little lower. I don't think they're going to go straight down. Markets rarely go straight down. Rarely. You had like 1987 where it went down 25% in 2 days or something like that. That is super, super rare. That almost never happens. Could happen that we we maybe we open up a little bit next Monday and then spend the whole week selling off into this blue box. I mean, that could happen. I just don't think it's very likely. Every time the VIX has gotten, high, I mean, the VIX could go maybe this much higher into this 35 area, which really isn't that much. And that tells me, that indicates to me that the S&P and the Dow have a little further to go down, not much. Let me get back on this chart. Sorry about all the bouncing around. So you could, again, you could see, a bar that looks like so, and then maybe something looks like this, and then, from there, bounce up. Now, we still have a lower low in our future here, like this, but certainly if you're scared and you just want to get out of the market, you need to take probably a little bit more downside, and then wait for this and get out right up here. So, all right, everybody. I hope that helps. I tell you, if you're not talking to your friends and relatives and telling them about the YouTube channel, you're really hurting your family and your friends. I mean, CNBC is not going to help you. Okay, Fox News, Fox Business Channel is not going to help you. These people are all in all the time, and that's what they talk about. They don't talk about stepping on the sidelines. That's not in their realm of possibility. We've talked about that before. We've talked about how these guys that trade institutional money, they simply cannot go to cash. There's no way for them to do it. So they hedge, they roll into, you heard, I don't know if maybe some of you heard that George Soros was buying coal stocks. He was rolling some of his money into coal stocks. Well, why is he doing that? Let's look at Arch Coal. Look at that move on Arch Coal. Arch Coal was all the way down to 98 cents, and now it's $3.85. The reason they do things like this is because even if Arch Coal rolls over and goes a little lower, it's not likely to go much lower from here, and it's been going down for years. So they look at it like, well, I can roll my money out of Netflix. Let's say I got money in Netflix. This is just how they do it, okay? But look, Netflix is starting to look broken. Look at this move. It was down $8.53 today. That's a big move in Netflix. So, whoops, hit the wrong button. So, why not roll my money into coal or into BTU, Peabody Energy? Peabody Energy was $1 back here 1st of August. Now it's $1.78. So these guys can buy tons of shares of this. It's likely to go up. In fact, on a percentage basis, it's gone up a lot. So they just don't have the luxury of stepping on the sidelines. And generally speaking, we're not good enough to pick these areas. I mean, you could pick coal now knowing that George Soros is in it. Maybe it goes up, maybe it doesn't. But he just has to trade that way because he can't pull his money into cash because it's just too much money. It's too much money for him to be sitting in cash. And it would crash the market. So he has to sneak money out of Netflix or Tesla or, I don't know, Facebook. I was going to go into some of these leaders. I never did do it. I don't think the list is that long. Let me just roll through here real quick. Let me put the studies on, because one of the one I want you to notice is this blue line right here. It's called the 50-day moving average, and it's an intermediate term trend line that a lot of the institutional people follow. But that's Accenture, okay, which was a leader. Alaska Air, it's still kind of leading, but it's on its way to the 50. Amgen sliced through the 50 and the 200-day moving average. Apple through the 200 and the 50-day moving average and going lower. AutoZone was very strong, looking a lot weaker. Biogen, there was a leader back here and has in the spring and has been kind of selling off and just recently accelerated selling. Cerner, that was not so much. Disney, we talked about Disney last time. Broken stock, sliced through the 200-day and the 50-day moving average. Expedia, on its way to cutting through the 50-day moving average. Facebook, through the 50-day moving average. Goldman Sachs, through the 50, through the 200-day moving average. Google, on its way to cutting through the 50-day moving average. Home Depot, was very strong stock. In fact, a lot of people were talking about a breakout right around in this area. Oh, Home Depot's broken out. And it did break out, and it went higher. But look, it just turned around and just gave it all back and then some. JetBlue was a leader. Same thing, sliced through the 50-day moving average. JP Morgan, the financials were pretty strong until very recently, and then they just started giving it up. LinkedIn, not really a leader since back here the first of the year. MasterCard has been a leader for a long time. Sliced through the 50-day moving average. Netflix, leader. Sliced through the 50-day moving average. Nike, sliced through the 50-day moving average. I mean, Nike there was all kinds of buzz right back here on their earnings. And, of course, that followed through and did really well. But, man, look at that move down. That's pretty substantial. O'Reilly, like AutoZone, it's about to slice through the 50-day moving average. Regeneron, this company, I could show you, but it's a what they call a 10-bagger. It thing's been if you'd have bought it way back when, you'd have made 10 times your money. It's been a leader, slice through the 50-day moving average. Starbucks down through the 50-day moving average. And this is significant. See how the 50-day moving average is held all this time? And then just boom, right through it. Tesoro, a lot of the refiners have been strong, especially recently, right in through here. Valero's another one. Valero, Tesoro, Ulta Salon was strong. Has been strong. It's really sitting on the 50-day moving average. Under Armour sitting on the 50-day moving average. United Healthcare sliced through the 50-day moving average. There's Valero, boom, right through the 50-day. Visa sitting on the 50-day. Walgreens blasted through the 50-day. So a lot of damage done in the market. And I just showed you the leaders. If we were looking at some that were more mediocre, these charts would look much, much worse. So you've got an increased deterioration in the market. Now the indices have started to roll over, and that does not bode well for mutual funds, IRAs, 401ks, those types of instruments. So now that I've fully depressed all of you, be sure to talk to your family and friends. Send them a link. Tell them to watch it. It's super, super important. Everybody always has regrets later. Man, I should have got out, and I should have done this, and I should have done that. Don't have regrets. Let's navigate this in a way that keeps you whole and preserves your capital and has you set up ready for the next move. Don't live through any more of this. It's only going to get worse. It may get a little bit better, and then it's only going to get worse. Markets don't go straight down. They don't go straight up. But we're definitely in elevator mode, okay? No longer in stair-step mode. All right, everybody. Well, listen, thanks for coming in. Again, send it to your friends and family. You can still follow me at InvestorClass on Twitter. I'll post this, and usually if I run across an article or two during the week, I'll post interesting articles on there as well. All right, everybody, take care. Thanks for stopping in. See you next week. Bye-bye.